It's an arithmetic issue. When you're spending 22% of all federal tax revenue just to pay interest on the national debt, it's an arithmetic problem, not a political problem. So freaking fix it. But nobody wants to do that. And until that happens, which I'm not holding my breath, I think that foreign governments and foreign central banks are going to continue to buy gold. They're going to push the gold price higher. And over the long run, I think that's going to be very good for companies whose revenues happen to be denominated in gold. I mean, you got royalty companies, you got service businesses, which are in many cases literally selling shovels to the gold miners. Those are interesting businesses. We've covered a few of those in some of our premium research. But yeah, there's a lot of ways to get exposure to that. And our analysis is there's still some good value in some of these businesses. Most recent edition, we talk about like, here's a bunch of companies that we've covered that we think are still present some very solid value, but it's no longer early days where we can look at and say, look at this massive disconnect between these ultra cheap, super profitable, dividend paying, debt free, well managed gold businesses and the rising price of gold. There's still a gap, and it's a healthy gap and it's a good gap. And I think there's money to be made in that gap, but it's not the same as it used to be.